Truck drivers today have been downloading tools and apps for brokers and for their business to run every day. GPS, load boards, fuel apps, tracking links, ELDs. They did it to make their life easier on the road. But while drivers were using tools, the freight industry was building systems. And systems beat tools every day. This shift didn't happen in Congress. It didn't happen in a courtroom. It happened inside the software. And most truckers never saw this coming. You see, modern freight runs on 4 digital layers. Drivers experience them as apps. Brokers and shippers experience them as systems. Layer 1 is navigation and driver utility apps. Apps like TruckerPath, Hammer, Sidekick, TomTom. These help you avoid low bridges, find parking, navigate legally, and plan routes efficiently. For drivers, they are survival tools. But when tens of thousands of trucks use the same systems, they generate macro-level movement patterns. Basically, this is where trucks cluster, where congestion builds, where capacity flows regionally. It's not personal surveillance per se, but what it is a pattern visibility. And logistics runs on predicting patterns, okay? Layer 2 is load boards and freight marketplaces, platforms like DAT and TruckStop. Drivers see listings, what's available, what's paying, where can I go? But behind the scenes, these platforms observe behavior. How fast loads clear, what rates stall, which lanes get ignored, which lanes get flooded with calls, time to cover metrics. If $2.10 per mile clears consistently in minutes, the system learns drivers negotiate one load at a time. The platform learns from thousands of reactions. This is what we call behavior modeling. And behavior modeling compresses negotiation leverage. So let me simplify it this way, okay? When I say aggregated data, I don't mean someone spying on your truck. I mean pattern recognition across scale. One driver's accepting $2.05 means nothing. But 5,000 drivers accepting $2.05 across a month, that becomes a pricing floor. They're not watching, okay? They're watching all of us combined. You see, drivers negotiate emotionally. Systems price statistically. You see, that's the shift. Now, let's address something that's also important. A lot of you think that brokers are trying to track your truck. That's not really what this is about. This isn't about someone watching your blue dot move across a map. Platforms like Trucker Tools, MacroPoint, Project 44, 4Kites, they're built to create shipment visibility across broker and shipper networks. This is real. They collect real-time location, on-time delivery percentage, delay frequency, dwell time, historical reliability. Over time, that builds digital carrier scoring. So if 2 carriers bid the same rate, the one with stronger digital performance is going to win every time. Not because someone likes them or not because they're in good relationships with that broker, but statistically, the data says they are the lower risk. That's what we call algorithmic preference. And algorithms remove negotiation leverage. Once performance is measurable, it becomes rankable. And once it becomes rankable, it becomes sortable. Freight will always flow to the statistically safest option first. And see, that changes everything. Then there's the real deeper layer, okay? You have fleet systems like Emotive, Samsara, Geotab. These are known for your hours of service, availability windows, idle patterns, operational consistency, historical dwell averages, uncertainty used to be leveraged for carriers. If a broker doesn't know when you're empty, you negotiate differently. If the system can predict your availability window, then negotiation tightens. Predictability favors the side with scale. Now let's talk about something drivers feel every week: detention pay. Drivers feel detention. Brokers model detention. When you sit 3 hours at a dock, it feels random. But the system has seen that dock thousands of times. It knows the historical dwell time. If a facility averages 4 hours across 4,000 loads, that's measurable. And once delay becomes predictable, it gets modeled. And once it gets modeled, it becomes part of expectation. Not we're stealing detention, but this lane runs long. This facility averages delay. This is standard dwell. Like I said, drivers experience detention emotionally. The system experiences it as a variable. You're negotiating one load. They have been negotiating 10,000 historical loads. That's the leverage gap. And if you think this is theoretical, look at just what happened in the stock market, okay? Shares of C.H. Robinson, RXO, J.B. Hunt, XPO, and Expeditors dropped sharply after investors reacted to AI platforms claiming they could reduce empty miles dramatically. Why would Wall Street react like this? Because they know AI reduces inefficiency. And inefficiency used to be margin. When automation improves freight matching and reduces empty miles, man, economics shift tremendously. So this isn't a conspiracy. Markets are repricing logistics companies based on how well they can optimize data. That tells you everything about where this industry is going. This isn't about spying. It's not about secret plots. It's about architecture. There's a lot of noise going on out here about illegal drivers and whatnot, and you're seeing companies that are filing bankruptcy overnight. Believe me, you guys need to keep your eye on what the real issue is, okay? Digital freight infrastructure concentrates leverage where data combines. Patterns are measurable, capital scales, and algorithms operate. Drivers are operating load to load now. Brokers are operating system to system. Understanding this doesn't make you powerless, okay? What it needs to do is make you more strategic. This is Big Rig Nation, and we're going to put drivers first, but we're also going to teach you guys and tell you about what's really happening in this industry.